Now is the author of that note, Tom Nikic from Needham. Tom, it's great to have you on. You downgraded Nike. Why?
So first off, thanks for having me on. I appreciate it. So look, like this is a turnaround that just seems to be taking a lot longer than I thought it would. I think very highly of Elliott Hill, the CEO who came in about a year or two ago to sort of rescue the company from the doldrums. But I think it's clear that some of the issues that they had were deeper seated and deeper rooted than we thought. And then there's a few things that are just out of their control. The China market is very, very tough. The U.S. retail market is very promotional. There's a lot of inventory out there, and then sort of the kind of straw that broke the camel's back for me was really the big disparity between wholesale growth and direct to consumer last quarter, especially in North America. I think wholesale being up almost 25% in an environment where demand is not that strong for the brand. I'm worried that it could cause some inventory issues in subsequent quarters.
So in light of that, what would you be watching for this to not be a value trap, but to be a value opportunity?
I mean, honestly, we would need to see better demand trends from consumers. We need to see some product innovation. They've been struggling for a long time to find that next big thing. And since they didn't have a next big thing to rely on, they leaned on classic retro styles, Jordans, Dunks, etc. But that can only take you so far, and those are franchises that are built on scarcity. So you need something new and exciting, something to kind of galvanize the consumer, which we haven't seen from them recently.
Tom, I hear you, but if we can throw up a 10-year chart of Nike, it sure seems like a lot of that bad news that you mentioned about Nike that's been happening is priced in. I mean, 65 a share on Nike is like October 30th, 2015 levels.
That's true, and obviously the stock has been very, very, very pressured the last few years. The counterpoint to that would be that the company is earning a lot less money than it did several years ago, and the profit margins are a lot lower than they were a few years ago, and a lot of that has to do with being promotional and discounting a lot, and selling a lot of stuff through outlet stores and through lower quality distribution channels.
Yeah.
And that's all stuff that needs to get fixed. And I think we're learning that it's not a quick fix. That it takes time to correct those things. And so I think it's going to take quite a long time before Nike gets back to.
When you say quite a long time, though, by the next Summer Olympics, right? Will it be? I mean, if there are investors who are looking for things, we know AI is hot now and all these derivative plays, but that could perform over time. Do you think Nike has fundamentally lost its cool in an irrecoverable way, or just that you got to be patient?
I don't think it's irrecoverable. I think they've had these moments in time in the past, and ultimately they've been able to pull themselves out of it. So I think it's more a function of being patient and waiting for the next big thing. Just remember that this is an industry with really, really long lead times. Product development cycles can take 18 months. So as they kind of keep working on it and keep trying to find new innovations and new products to come out with, hopefully they can reverse the ship and make back the profits that they've lost. But it's not an overnight fix, and certainly not by the Summer Olympics.
Okay, so you don't like Nike, at least not right now, but you do like VF Corp. Why?
So I like VF. I think VF is farther along on the turnaround than Nike is. They have two of their three biggest brands, the North Face and Timberland, I think are performing very, very well. I think they benefited from a lot of the cold weather we had in the Northeast and the Midwest this quarter. And the Vans brand, which has been a bit of a problem child for VF for a while, we see some green shoots there. And then lastly, the balance sheet, which has been a big problem for them, and they were really highly levered. The balance sheet's getting a lot cleaner, and as they continue to generate free cash flow and work down the debt balance, I think it becomes a more appealing name for investors.
Okay, Tom Nikic, thanks for joining us.